Welcome back to Ferocious Education. This is Zed. Today, we're going to be talking about a different stock, going with the ticker NRDY, NRDY. Now, in this video, we're going to dive towards due diligence, technical analysis, and what we think about this one. So without further ado, let's jump right into this one. So NRDY. First off, I do want to go over on who they are and some of the information that retains to some of their offering as services. First off, who they are. So they're a purpose-driven company enabling access to high-quality instructions and transforming how people learn through technology. So some of the options including one-on-one. So learners meet with hand-picked experts on our live learning platform and get highly personalized, effective, and convenient instructions in over 3,000 subjects. Post-sessions recording are available to review and preserve what was covered, and on-demand help is available at a moment's notice. And then you got small group classes. So with an average size of between 5 and 15 learners, our small group classes provide expert interaction, collaborations, and lessons tailored to that group. The small group classes are ideal for learners seeking structure in a social environment. And then live large group classes. So this is taught by subject matter experts from a vast range of topics. Our live large format class offers learners all ages of a convenient and engaging way to learn. Large group classes accommodate anywhere between 500 and 50,000 learners and range from a single session to 3 weeks. Our popular STAR courses are taught by celebrity experts and have featured actors, astronauts, neuroscientists, professional chess players, and more. And then you have self-study. So this one is an adaptive assessment that basically helps baseline of knowledge for learners, allowing them to focus on their biggest problem areas. And then an extensive library of practice per problems, aligned with the academic standards, video, and self-reflection is given, and the students themselves are able to advance at their own pace. And another one here is Varsity Tutors for Schools. So Varsity Tutors for Schools gives districts access to one-to-one private tutoring, small groups tutoring, and on-purpose built live learning platforms and more. By working with schools to find the right tutoring solutions for their need, closing both the learning gap and opportunity gap within its reach. So that kind of gives you a good kind of idea. Now let's dive into the investor information. So this company, or this ticker itself, was previously known as PACE, P-A-C-E. Currently, it's known as NRDY, N-R-D-Y. So this here, the group raised $450 million through an IPO of a SPAC, which you already know by now, in October 2020. And concurrent with the IPO, PACE secured an additional $150 million FPA commitment, increasing the PACE capital base to $600 million. So NRDY is being listed on the New York Stock Exchange under the ticker NRDY, and the management and existing investors were expected to retain 51% ownership stake. Now, in connection with the transaction, PACE has raised $150 million PIPE of common equity at $10 per share and a private placement anchored by Franklin Templeton, Healthcare of Ontario Pension Plan, and Koch Industries, as well as several other leading institutional investors. Now, PACE expects to effect NRDY's public listing with an expected market cap of around $1.702 billion and target net cash of approximately $297 million. PACE expects also to effect NRDY's public listing with an expected, well, actually I did just read that, my bad, represents an attractive entry multiple of 7.1 times projected 2022 revenue, which is around $198 million. So moving on from there, they already have some of their existing previous recent TPG IPOs, including Airbnb, Uber, McAfee, and a bunch of others. And select TPG and marketplace investments, including Spotify as well on there, Hotwire, Box, and others. And basically what we're saying here is TPG has a really good amount of experience on there to really push into this one and push NRDY into success. So the large TAM ripe for disruption, this is a $1.3 trillion offline direct-to-consumer education market, is moving online quickly. COVID forced a step function shift to online adoption that we expect to persist. Now, this is not so much the case in all cases scenarios, so you gotta also remember that down the line, there's a massive hope that everything goes back in person. So here in Ontario, or at least where I live, in the GTA itself, in Toronto, people are allowed to go back to school, and all kind of kids. Now, yes, if you do get to test positive, whatnot, you have to quarantine, you said, for 14 days, depending on your vaccination status, and all that kind of stuff. But mainly, it's going back in person. And other things including as well, is that there's not a lot of funding for education. So that as well needs to be kind of changing. Wisdom is not a product of schooling, but a lifelong attempt to acquire it, for Albert Einstein. And right here, some of the flagship businesses. This is again from TPG as well, and this is the presentation, sorry, on TPG. So Varsity Tutors. So it's a leading platform for live and online instructions. Around 4.7 million hours of 2020 instruction hours, and more than 3,000 subjects. And some of the legacy businesses, including Virtus Prep and First Tutors United Kingdom. Now, of course, it would go ahead towards showcasing the differences on there, and NRDY is kind of being shown as it's on its own bubble. So it's an online live learning platform. Still has some options from what I understood from asynchronous learning. So basically learning that you can do without live learning, but they kind of put themselves more around live learning and online. Now, another thing here is a comprehensive learning destination. You're able to see some of the numbers. So around $132 million of annualized revenue in Q4 2020. Around online revenue growth was 4 times year over year, with gross margins of 68%. Active learners growth was around 59%, and online session growth was around 167%. Again, we're only talking about Q4 2020 year over year. Now, another thing we're taking a look at is the massive difference between 2019 and 2020, 6 in this case, in the 30% CAGR, and between 2004 and 2019, it was around 5 times an increase. So you got to be very careful, because this is really also impacting on the headwinds of regulations and basically acceleration trend toward online that was really fueled by COVID itself. And nationwide reopening has led to accelerating growth in inquiries for NRDY solutions. Growth in open areas has accelerated at higher rates. So here they're basically talking about, hey, opening itself has actually also accelerated NRDY's operation for the people who don't want to send their kids to school or don't want to do education in person, because of whether they're autoimmune or for basically not wanting to use the system itself and trying to find an alternative option that they might have explored. Now, again, we did talk about free live online classes, free assessments, and they do talk about some of the learners and experts and everything in between. There's a lot of information on here. Quality experts, why it matters, scale selection, and there is around, I think, twice as much in terms of information on there. Basically, them talking about artificial intelligence for human interaction. So basically, they have a data kind of lake or a data pool. You got curation layer, which identifies the best experts. And the matching layer selects the best experts as well through a matching score. And then going on towards adaptive learning layers. So basically they look into assessments, see how they improve. And 40% are more likely to renew after completing an assessment. In terms of growth, you're able to see active learnings have continuously grown in 2020 and throughout 2021, including online sessions and sessions taught by active experts. Again, I try to give a balanced approach, so you got to remember COVID has really accelerated that. So you got subject expansions, format expansions, and product expansions is their kind of drive sustainable growth plan. Now, all in all, you do see a lot of information on here in terms of building scale, scaling faster, more efficient opportunities. But I'm not going to dive through that, but it's very interesting if you would like to pause at any given minute and just take a look into all that kind of information. But at this level, we're going to move on to one more thing, which is the revenues. So currently, the total revenue of 100% online for Q4 2021 forecasted is anticipated to be around $43 million. That's around 30% year-on-year growth. The gross profits are 31%, which is 31 million, which is around 71% of the total revenues. Now, all in all, basically on the net income, they're anticipated to be 0 on Q4 2021, which is 0% margin. Adjusted EBITDA is expected to be positive for the first time in Q4 2021 at 6% margin. So they're still struggling with getting in more of a highly profitable model, but hopefully time will tell on whether they can actually establish that or not. Now, some of their previous earnings, for instance, overall and in the future. So 2019, you get to see that the total net income was 22 million. In 2020, 25 million, even though you've seen a really nice increase in terms of active learners. So they anticipate in 2021, 50% active learners increase, even though 2020 versus 2019 was 37, and their net income would still be negative around 11 million. 2022, around 14 million. In 2023, they're anticipating to hit a positive milestone with getting $1 million as a net profit at a 1% margin. So when they're talking about these kind of revenues, you got to understand that per year, they're anticipating around a 50% growth. Previously, they've hit around 35% growth. So they're anticipating that that money that you're using will really rapidly expand it. So that is something to really consider about whether it's reasonable or not from your own perspective, and that really goes back towards people's opinions. Now, the transactions overview, we kind of read something about this, so we're not going to really go over this. And from here, let's move on quickly to see if, to just mention that there's another presentation for the Q2 2021 presentation kind of update, and it basically covers everything we've covered, as you get to see from here. Just adding more numbers for Q4 2021, or sorry, Q2 2021. Now, some of the latest news, and I'm just going to mainly read the headlines here to kind of understand what you're into. I'm not going to dive really in depth. So NRDY and TPG places tech opportunities and announces the closing of the business. It's currently its own ticker. They generated proceeds of more than $575 million. And 2021 Parents Sentiment Report uncovering the far-reaching impacts of the pandemic on students and families. And Varsity Tutors launches subscription services on after schools, and they also have live tutoring solutions for school-facing disruptions to instructions this year, and other things including financials and celebrity instructors, that kind of thing. Now, quickly, I did try to find institutional buyers. The only thing I could find is Virtual Capital apparently had a position, Morgan Stanley, Bluecrest, but I'm not sure how accurate this is because it does go back towards TPG, and that might not be still accurate. So we're still waiting for the new ticker to show up on this platform. Let's move on a bit towards technical analysis, but before doing so, if you would like to see more content like this in depth, make sure to click the subscribe button on the bottom right corner and leave notifications on. Don't forget to drop a like to this video as well. And if you would like to join our Discord, you can join us down in the comments below. Hopefully you're going to be able to basically interact with people in a chat room that is totally free and no one's trying to upsell you on anything. Now towards technical analysis. Now from a technical analysis perspective, and I'm using TradingView because it really does highlight the history really nicely, so that's good. My kind of platform doesn't really do that. So for SPACs, we're able to see that this is kind of also going towards the normal behavior of a SPAC, where just a couple of days before closing or right around closing, it jumps up, and as it does, people start selling because the kind of big day is done. The next thing is not very clear. What is the very much closer next catalyst that will skyrocket this one? Well, we don't know. Maybe the next earnings? Well, for my own opinion, it would be Q4 2021 because that's where their EBI TDA might even just hit 0 or positive. So that's a key milestone. The other one for me is a bit of a longer one, 2023, to see whether they're actually reaching there. But even 2021, because we can go back and compare their forecast to 2021 and see, hey, did they actually reach those kind of forecasts, or were they just trying to over-exaggerate their potential of growth? Now, in terms of Willing Percent R, which is very similar to the RSI, you're able to see that this one is very oversold. That means there's a lot more selling action, and it doesn't take a genius to see these massive 2 red candles that are very similar to the buying, and it really shows that people basically circulate around. A lot of people, hence, bought ahead around right here. You get to see around 995 and around 988, went to social media, pumped it up, and then sold around probably around this region. And then right now it becomes kind of a quiet zone. So you got to be very careful on that. The next thing is MACD. The MACD is showing more of a negative reversal on the way. Given on the last kind of day of movement on the bullish move, that took around 5, 6, 7 days or 8 days. We're currently into 2. So that means perhaps sometime next week by the end of it, this might actually reverse. But what most likely is going to happen to this is that it's going to accumulate. And the accumulation is not perhaps a bad thing. When it accumulates, it's probably going to meet around $10. If it hits bad news or anything that wasn't, or the PR goes silent, it might dip down to 9 or 8. And then after that, good news comes in, it reaches back to 10. If the good news is really nice, we'll go back to 12 or 11. And that's the way it happens. Unless there's some kind of crazy news that some people might be able to cook and try to pump and dump it and reach it to 20 or 30. But currently, you got to give it time because it's a SPAC and it needs to accumulate. If it doesn't accumulate, similar to what you've seen here, it's just going to continuously crash down. And you need accumulation before a jump. And I do see it going back to $12 or $11 sometime in the next year. These kind of SPACs all the way jump if their model is interesting. And it really depends on retail. But in general, you got to let it accumulate around $10, seeing some more results because they can easily promise you the moon and the world when they're pre-SPAC. And right after SPAC, that is what matters, is seeing the forecast and everything they promised, whether it will reach or not. Now, a quick thing. If we're able to take a look into resistances and support, I'm not going to do Fibonacci because I don't think it's relevant very much in this case because the points aren't that far apart. But there is a very strong resistance around the 1018 above there, a really strong one, very close to the 1038, and then 1057, and then going around 1099. 1120, 1159, and then above there around 12, around 40 and 1228. Those are two other resistances. Supports are very close to the 999, which is at $10 again, very close to that. 993, 990, not a lot of supports, 979, and finally 955. But do anticipate that the high $8 would probably be the lowest where it would go in the next couple of months or so, and it can go to $12. So it's kind of a 20% range up and down where these packs usually accumulate by and kind of play around. So what do I think about this one? This is a very tricky one. This pack is looking interesting. The people backing up are really great. They've done Airbnb and everything in between for Spotify and all that stuff. But if we were to take a look, for instance, at Airbnb, okay, so we're doing Airbnb on the NASDAQ, and you're able to see it's similar to what happened. There's early push, it kind of drops. This one here was an inverse cup. You get to see kind of it's slowly accumulating back. But this had time. This was all the way from almost last year. So you will have high volatility. You got to let it grow slowly. I do think it's an interesting one, but their push seems to be highly exaggerated, or a bit exaggerated from my own opinion, relating towards COVID and online learning. In-person learning still has a lot of way to go, and I think it's harder to kind of replace it by this giant company, the giant wannabe company, replacing with online learning. There's a lot of regulations and rules in place to not really go with that. And that might put a lot of teachers out of place. And think about it, the education system is a little bit underfunded, for instance, in the US and also in Canada. So you got to be very careful on that. They're a bit more ambitious, and their ambition might hurt them in the stock price. But hopefully, if they do follow up with their ambition, that would be really great. And keep an eye on the forecast numbers and the actual numbers. That will give you a cue. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.